Hey everyone, this is Robert Keens with goldsilverpros.com, and today I'm joined by a very special guest, Ian Berzins, CEO and Director of Braveheart Resources. Braveheart Resources acquired the Bull River Mineral Corporation of all its subsidiaries and assets, including the BRM property in January 2019. They're headquartered in Calgary, Alberta. It's a development stage mining company engaged in the acquisition, exploration, and development of minerals in the East and West Kootenay regions of British Columbia. Ian, how are you doing today? Thank you for joining.
Good. Pleased to join you, Robert.
So tell us a little bit about your company and your project here and why investors would want to take a look at you.
Well, the company's changed quite a bit in the last 2.5 years. Braveheart is, as you mentioned, a junior mining company based in Western Canada. About January of 2019, we acquired a past-producing copper, gold, and silver mine near Cranbrook, BC. So that's very close to the Montana border. And we like the idea there because it had past production. It's got a 43101 compliant technical report, about 6.5 years of I would call it production based on the current resource. We like the fact that it's very close to established infrastructure in terms of roads and grid power and that kind of a thing. So we've got an interesting project there. We're currently, I'll get into that in a minute, but we're currently waiting on a permit so that we can mill a surface stockpile, followed by mining in the underground. And what's particularly interesting is that we have about 22 kilometers of underground tunnels pre-developed. So the initial capital costs for us to get going are going to be fairly low. We recently announced the opportunity to purchase a larger advanced past producing mine in Pickle Lake, Ontario, north of Thunder Bay. That's quite a large project. It's got about 8.5 million tons of material that's identified again in a 43101 resource. That particular project we're advancing, or we're trying to close on. We have a letter of intent signed, definitive agreement signed, and we're trying to get final approval from the Toronto Stock Exchange. So in both cases, we're a company with a market cap of about $13 million Canadian, and we have two projects that we'll have in our hands that are primarily copper, but with other metal attributes as well.
Okay.
Maybe briefly, Robert, if I could move to in terms of our corporate structure, today we've got about 135 million shares out. So as I mentioned, market cap about 13 million, close today around 10 cents. We did recently raise some capital through a private placement that was oversubscribed. We raised about 1.54 million Canadian. We have a little bit of debt, but I would consider it friendly in terms of both the debt holders. One's a convertible debenture from the previous debt holder, and the other is a loan from an insider of the company. But in terms of overall ownership, insiders control about 32% of the overall company. So we have a strong say on and support for how we develop the asset. In my mind, we have a pretty experienced mining team. I've spent the majority of my mining career in Canada. I've worked copper, gold, oil sands, and also coal. We also have a significant depth in our directorship. Phil Keel is one of our directors that spent a career in coal and oil sands and was a senior operator at Canadian Natural Resources. We also have John Morgan as a second senior director, where John most recently put into play or brought on stream in Nova Scotia, in Canada, Atlantic Gold's property, along with Stephen Dean. So John's, again, geologist with a strong operating background. Collectively, we've got depth in both or in geology, engineering, operations, and also senior management. Uh, Currently, if I just return to the Bull River project for a minute, we have a project in a unique situation where we have about 8 months of pre-production on the ground of run-of-mine material, followed by about 6.5 years of mine life. Relatively low capex to kick it off. There was previously spent between $200 and $300 million by previous investors
Mhm.
between about 1976 and 2010. So we're inheriting a project that is largely built, and we have to do some work on the surface structures or the surface mill so we can put that back into production. Mentioned briefly, we consider British Columbia favorable jurisdiction. We're very close to 3 established mining towns, and we have grid power and roads right to site. What was unique about this purchase as well is that we bought we bought the actual subsidiary company rather than the assets in order to retain about $150 million in tax pools. So a decent reserve. What's interesting to me is that we're fairly shallow. We're only down 350 meters. So we think that the current resource, about 1.5 million tons at 2.3% copper equivalent, has the potential to become significantly increased. And as I mentioned, we've got access to the ore body right now underground. The
Mhm.
mine is dewatered, and so we can access the ore body currently on 7 different levels in the underground. The time frame for us really is we've begun the permit application process, and we have about 4 key projects that need to be completed. One is a replacement of a surface transformer, replacement of the in the mill itself would be producing a flotation concentrate, so we need new flotation tanks, and we're going to be dewatering the tailings rather than putting them in a conventional tailings pond. So we'll be looking at introducing dry stack or filtered tailings as what's considered one of the best available technologies. Um, the other part of our current program is to, upon completion of the Terry mine, which is the asset in Ontario, that we plan to initiate a PEA. So again, I'm going to move quickly through the actual presentation I have in front of us.
Mhm.
But if I move over to the Terry acquisition, what intrigued us with this is that this mine was run between 1986 and 92 continuously by a Belgian company called Umex. So today, we already have a significant resource in the measured indicated category, about 8.5 million tons. Additionally, we have a large inferred, and this is all in the underground. Um, so these grades are similar to the Bull River, where it's about the copper portion is about 1.7%. But what intrigues us with Terry is that it also has nickel, palladium, platinum,
Mhm.
gold, and silver. So it's got another suite of byproduct credits in addition to the copper. Um, we're acquiring this for relatively low cost, less than $2 million. And we're of the view again that it's a significant asset. It is flooded, but the prior development had about 28 miles of tunnels. They had a shaft. And so we have an advanced project with significant drilling. This project is in Ontario, which is again a tier 1 jurisdiction in Canada. And so we think that this is an excellent addition to the Bull River mine. So the current plan is, of course, to bring the Bull River mine in production with positive cash flow, arguably within a year, and then from there we'll look to advance the larger Terry project. Terry, for argument's sake, it had significant past infrastructure, over $100 million. Today, there's been drilling over the last 10 years. It also has a significant open pit potential called the K1-1. I like that in terms of the grade and the proximity to the underground area. This is a property again that's in proximity to an existing town, all-weather roads and grid power that's currently would be shared with Newmont's Musselwhite mine. So larger deposit, open on strike and open on depth. So that's really the highlights that I would
Mhm.
say for you, Robert. Any questions I could try to answer for you and your views?
Yeah, absolutely. The one thing that really sticks out to me is that in both projects, you have more than just one asset. You get multiple assets there, of course, copper being the primary one, but you have palladium, nickel, platinum, gold, silver. So how does that help you in terms of the economics of developing these mines when you have multiple metals that you're leaning on when you
Yeah,
pull
it's a
the?
great question. I mean, we're excited with copper up around 318, 320 today. So
Hmm.
at Bull River, about 78% of the metal value is copper. Gold's about 15, and the rest is silver.
Hmm.
At the Terry deposit, the majority is copper. There's significant nickel, but for argument's sake, something like palladium, when this was mined by UMEX between 86 and 92, palladium prices were between about $50 and $100 an ounce. Today they're around $2,200 US. So
Hmm.
that in the past that would have not really even been much to focus on, but today that could have the impact of taking several dollars a ton off of your mining costs. So we also want to use, I'll call it newer technology in terms of milling. It was only in the latter years of Terry that they even tried to recover the nickel and the other metals. They were primarily focused on copper. So I think we could design the new mill to really optimize the metals that are there, a lot of expansion capability. And what I really like is I've worked in the Northwest Territories in Canada, the Yukon, much of the Canadian North. And so infrastructure to me is extremely important when
Hmm.
you don't have to wait for power and roads to get your project in, and you don't have to fly people in, to the north in airplanes and remote schedules. So anytime you can be near existing communities, I think it's a tremendous advantage to de-risking the project. So in the case of Bull River, to be able to bring a new project online or a brownfields project back online for 6 million is almost unheard of, and the Terry project again will be. I plan to produce a PA on that before Christmas. So that's of course pending closure fairly soon on that. So I think again we're going to have a project that people are going or projects that people are going to look at and say, these are significant assets, and the company is arguably, in our mind, seriously undervalued in the market today.
So what's your outlook for the Bull River mine? Is that one, are you going to do some additional exploration? Are you guys ready to open that up as soon as you get the financing in place? Or can you give us a little bit of a timeline or?
Sure. Yeah. I mean, one of the things with Bull River, I get questioned at times, why would you, what are you going to do after 7 years? So the
Mhm.
first prize is we've got about $23 million worth of metal value on the ground in front of the mill. So that material has already been brought to deck and doesn't require mining costs. So the actual net proceeds on that mining is very good and puts us in a position first year where we can really repay any of the capital we need for the mill and also our debt. So that's first prize. After that, we've got, as I mentioned, about 22 kilometers of tunnels. So the mine's been pre-developed down 350 meters. We drilled earlier this spring, or Q1 actually, 5 holes that intersected similar structures at width and depth, or sorry, width and grade, that are in the existing resource. So we're very optimistic that this resource could go down. No reason it can't go down 1,000 meters with the nature of the deposit. So we have a nice starting point, and it'll really come back to commodity prices, how far we can take that mine underground. But that's really going to be our flagship, where we
Mhm.
generate free cash, and then from there we'll in parallel be looking to advance the Terry project. So our challenges at Terry are really going to be, do we dewater the existing underground where there's 8.5 million tons that have been identified, or do we continue to upgrade some of the inferred resources to a higher grade like measured and indicated. So we may do a bit of both.
Mhm.
But I guess first prize for us is to close the acquisition with Cadillac Ventures, and then look at uh, look at where we can, best advance our project. We are going to have to raise a bit of money to complete the Bull River, but as I say, we expect to have permits midway through next year, and upon the permits, we'd like to, at least as a starting point, mill that surface stockpile for about 8 months.
Yeah, it's great to have that. Really cuts down on your costs and gives you some near-term cash flow, which I think is good news for investors so that they're not worried about how much near-term dilution you're going to have and how you're going to finance your project. Looking at both of these projects, they both look very interesting, I would say, for different reasons. But in terms of exploration upside, is
Yep.
there, I know you mentioned on Ethereum some additional intercepts, but what about both projects? Uh, how much resource do you think you've looked at, or how much of the land package and how much additional exploration could you be doing?
Yeah, so if I focus on theory, I mean, if I focus on Bull River, this is simply trying to chase the known deposit down dip and on
Hmm.
strike. But we've got a 10,000 hectare land package, a significant land package with some old workings and outcrops. But we're going to focus our exploration activities down dip underground at Bull River. At Terry, it's a bit of a different animal. Between the measured, indicated, inferred, we've got about 20 million tons with a copper grade of 1.7. But I don't really want to chase it too much deeper. I mean, it's good to know it's there, but you got to look at the economics of chasing that kind of grade at depth. The K11 is interesting to me because we've got 54 million tons at about a 0.38% copper, about 0.1% nickel, and then relatively decent palladium, about 0.14 grams per ton. So so what I'd like to do is to advance that K11,
Hmm.
take that 54 million tons, maybe get some of it into M&I, but there's also an additional two deposits there, one called the J and K, J and G zones, and they were identified by the previous owners back in the again in the 90s with an additional 55 million tons at about zero point 0.4. I can't I can't um, because of 43101 and
Hmm.
regulations, I can't declare them to be resources. But in 1992, they qualified as part of the database or the resource base there. So there's two significant opportunities to expand near surface deposits, which are about 3 kilometers away from the existing mill. So again, the previous owners have done a lot of drilling. The guys that we're buying this from, they were valued at about $45 million back 10 years ago. So there's no
Hmm.
question that the project does have merit. And but again, there's a limit to how big you need to have something drilled off in advance before you put it back in production. So
Hmm.
I'd be looking at an operation kind of similar to what was mined by UMEX at about 4,000 ton a day to start, something that's more manageable in, a couple of $100 million rather than $1 billion project. Because as you can appreciate, a junior rarely is going to be able to raise those monies in the capital markets.
Yeah, and it's interesting to note for the listeners to really pay attention to what you just said. This isn't a greenfield operation. These are existing deposits. It's brownfield, especially with the Bull River. You don't have a lot of money to get back into that one to get that producing. And I'm looking at their internal rate of return. It's 92%, which is just astounding. You don't see that a lot of times on projects. Can you talk a little bit, maybe details about how you guys are getting such a good return on that one?
Yeah, well, the biggest reason for that is initially, as I mentioned, the surface stockpile is already there in place. So
Hmm.
we can generate probably about 15 million, 16 million free cash just from milling the surface stockpile. Um, and so when we look at that project, that's why you get a positive return in your very first year. After that, the other advantage is that there's with the underground tunneling, if we were to do that today, it would cost us about $60 million to put in place. And if we were to replace the surface assets, that'd be another 35 million. So we're really inheriting assets that are 95% of the money's been spent. I mentioned to you that we'd actually pre-developed the mine on 7 different horizons, so we've actually drifted on the mineralized structures, and so we could go mining tomorrow. The real issue for us is we have to finish our permit to complete deposition of tailings. But that's why the rate of return is as strong as it is, and how far below 350 meters we can go is really going to be dependent on commodity prices at the time. Copper will be absolutely key, but certainly with copper prices north of $3, we can selectively mine what we want. Higher copper prices would allow us to take that mine a little bit deeper, but we certainly want to differentiate ourselves from other juniors, that we're not a project generator. We're not just trying to drill these things so a big guy can take us out. We plan to actually generate free cash, and and obviously look at other projects going forward that are either in proximity to our core assets, or similar projects. So we will be copper based, but like I say, we still will be looking at opportunities to add, gold, the PGE metals, and also gold and silver.
Yeah, and the outlook for copper is really, really strong. I know Frank Holmes of US Global Investors has talked about this a lot. My own research has shown there's going to be a tremendous need for copper, especially as the Chinese middle class rises. There are 190 million middle class Chinese who are looking to improve their lifestyle, and it's going to take an immense amount of copper. A lot of the studies have shown that we're really going to be in copper shortage here in the next 3 to 4 years. So projects like this that can produce copper, like you said, I think deeper resources are going to become more economic because the price is going to have to rise given the demand that we're going to be having. So the outlook, I think, for copper companies is really, really strong, and it's one that we've been focusing on here lately.
Well, the other thing, when I look at our PEA when it's revised for Terry, I'm really looking forward to it, because the previous PEA that was done in 2012 had an MPV about 378 million. So it was a significant project, but at the time the foreign exchange, Canadian US, was about 0.99. So certainly we like the ability to pay our bills in Canuck dollars, and sell our products in US dollars. So
Mm.
there are some advantage between just exchange and also metal prices. So comparatively, the metal prices that we be looking at today are different. And again, I can't overemphasize the proximity and infrastructure. In Canada, a lot of people are excited about the Golden Triangle and the northwest
Hmm.
corner of British Columbia, and there's some really interesting projects there, but frankly, they are infrastructurally challenged,
Hmm.
and only so many of them will actually go forward. So
Yep.
this is where I like that, to get a brownfields operation where the footprint is already there, and there's an appetite because you're in established mining communities. For example, at Bull River, we're less than 60 kilometers from Fernie, Cranbrook, and Kimberley, which was the home of the Sullivan mine for 100 years. So it's prime mining territory, with an appetite to bring some more mines online. So we really like both the jurisdictions that we're talking about, which we consider in Canada to both be very safe.
And I'd be remiss if I didn't ask you about the slide you have up now. I know you guys have a little bit of debt. Can you talk about the advantages of you using debt today at low interest rates over other methods of financing?
Yeah, I'd forgotten I'd stalled on this slide, but yeah, I mean, so right now we have $5 million of debt with Matlock Farms, which is an insider, and I call it friendly. We needed this loan to actually be able to purchase Bull River. Our other debt is a convertible debenture, about 3.6 million. It was 6 million, and it was originally negotiated with the underlying debtor in possession of the previous owner. So we were able to negotiate very low interest terms, 0, 1, 2% interest in the first 3 years. This past year, I was able to negotiate with the debenture holders that we actually converted 2.4 million of that original debt into shares of Braveheart at 20 cents. And this is when we were trading at 12 and a half. So today, this year, that remaining 3.6 will accrue interest at 1% this year, 2% next year, and then we've added a third and a fourth year at 5%. But my belief is that we're going to have the cash to repay that outright, or the deb holders are going to want to convert one or two. But it's not staring us in the face. And of course, the larger debt to Mr. Matlock is one that we'd like to eliminate. But I think it's not unhealthy to have some debt, but I
Hmm.
don't want to add too much debt, and then be able to struggle under it in terms of interest rates or ability to repay it. So we're sensitive to dilution. So it's going to be a mixture. We do have to bring in another $5 million to complete the upgrades at Bull River. But once that's done, Bull River will be cash generating. When it comes time to look at how do we advance the Terry project, that'll be a bit of a question of what size of an operation do we build, and most of us are miners, so we want to make sure that we don't we don't smother under debt, but
Hmm.
at the same time, I'd rather be raising money at 50 cents in a year's time, not at 10 cents.
Agreed. Last thing I want to talk about, we've talked about the jurisdiction, we talked about the project, we talked about the financing. One thing that I always talk about when I'm doing reviews of companies is the management team. Can you talk a little bit about your management team and some of the advantages you have? I see that you have a lot of experience on this team.
Yeah, I mean, in terms of the actual underground experience myself, I would probably have the most, over 35 years working in Canada, with um, a variety of companies. So the particular projects that we have, they're actually a little bit small for some of our backgrounds, but um, I look at our bios. David Johnson is really the founder of the company, and he assembled a number of projects. So he's got good experience in kind of the early stage exploration. I'm more of an operator, and I've worked at all facets, right up from I mined as a young mining engineer as well, and worked my way up through. And most recently for me, before Bull River, I was VPGM at Mount Milligan, which is a large 60,000 ton a day copper gold mine currently owned by Centerra.
Mhm.
So really, when it comes down to it, we have people that either have geology background, engineering background, finance background. Gester Christensen worked with me before at Sandgold. We were there together for about 6 years. So I think we've got a nice background.
Mhm.
Brian Murray had been with us. Brian's a founder of the company along with Mr. Johnson, and Brian's got a serious or significant experience in the junior resource sector in Toronto.
Mhm.
So I think again, um, we I like the depth that we have to be able to take on a project, whether it be underground or open pit. Mr. Phil Keel has primarily been an open pit guy. I've been kind of 50-50 between open pit and underground. So, sometimes the underground mines, even the small ones, are more complex than a large open pit. But we certainly, and our intent would be as we go forward is to again look at ways that we can enhance the board and bring some more depth as the project grows.
Yeah, so the key takeaway for investors here is you guys have done this before. You're in a great jurisdiction, so there shouldn't be a lot of thought on execution risk. You guys should be able to execute as you have done. You have a very experienced management team there. Any last thoughts for the viewers on Braveheart, Ian, as we wrap up the video?
Yeah, I hate to be cheeky, but one of our directors, Phil Keel, he likes to use the phrase rinse and repeat. So
Hmm.
the Bull River, we saw an opportunity that others saw as challenging. We looked at the upside and fought hard to get it, and we were able to acquire it out of a CCAA process, and then we tackled for similar reasons. We tackled the Terry project because we saw the same opportunities where some of the previous operators either didn't have the experience background to execute. So I think that's really what defines us. We're going to only add assets that can, that we can get our heads around. Um, I'm not interested to be drilling for 10 years to decide whether we're going to do a project. our intent really is to have projects that can arguably be brought into production kind of in that 3 to 5 year timeline. And in the case of Bull River, it'll be 3 years probably from the time we acquired the asset, but from today, certainly within the year. And then Terry may be a little bit further out because we have to finance it. But yeah, that's how we really would differentiate ourselves from our competition, if you will.
Okay, great. This has been Braveheart Resources with Ian Berzins. Ian, thank you so much for joining us.
Thanks again, Robert. Take care.